Do you know which automaker is taking market share in electric vehicles, generating billions of dollars in free cash flow, and trades for a 5 price to earnings multiple? It's not Tesla, it's not Rivian, it's not Lucid, it's General Motors. GM is actually taking share in the US electric vehicle market. I think that will continue well into 2025. The company is also doing extremely well in trucks and SUVs. They just announced some numbers from the third quarter that really, I think, put context to how the company is doing right now. Are we going to see margins shrink as maybe the economy slows down a little bit, people stop buying vehicles? Maybe a little bit, but GM is in a much better position than most of its competitors. Instead of losing money, like you see with Lucid and Rivian, instead of margins dropping like a rock, like you see with Tesla, GM continues to print free cash flow quarter after quarter. They're buying back about 20% of their stock each year. So let's dig through some of the most recent numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stock to buy right now. I'm going to start with the high level numbers from Q3. And I'll get to some of the detailed numbers in just a second, but wanted to start with this presentation. The core for General Motors is still pickups and SUVs. Number one in full-size pickups and full-size SUVs. Full-size is important because that's the most expensive. It's where the most money is made. And they had a record number of electric vehicle sales, 32,000 sold. That's a run rate of 130,000 vehicles just being sold in the US alone. So really impressive numbers on the EV side. And let's start with some of those EV numbers. This is the percentage that EVs is as a percentage of overall vehicle sales, new vehicle sales. Now going to be about 8 to 9% in Q3 2024. The pace of increase has slowed down a little bit. That's one of the reasons that electric vehicle stocks have not done particularly well recently. But look at the growth that General Motors has. Since the first quarter of 2024, so just 2 quarters, production has doubled or sales has doubled. Market share has gone from 6.5% to start the year to now 9.5%. I don't think most investors would think that General Motors is selling almost 10% of all of the electric vehicles today, but they are, and that's probably going to improve. And that's because we have an electric Escalade that is going to be coming later this year, and also another Cadillac Optiq. So 3 Cadillac vehicles that I think are pretty compelling, reasonable price points for sort of that higher end of the market. And I think this is going to continue to be a source of momentum for General Motors, but this is not where most of the cash flow comes from. Most of the cash flow comes from selling big trucks and SUVs like you see with this GMC Acadia Denali. So the average transaction price, $49,349, that's about the same as it was a quarter ago. Incentives, also flat with where they were in the second quarter. Inventory, which is also something that we want to keep an eye on for automakers, going to be about flat in that 50 to 60 day range is where they're expecting to end 2024. So I don't think that's a huge problem. You're going to have some downtime due to the holidays. That's pretty typical in manufacturing and in the auto industry. So it seems like, at least on the surface, based on what we know right now, we're not going to see a huge deterioration in GM's margins because sale prices are remained relatively high. Their CFO talked about this recently, that they're not going to go down the same path that automakers have typically gone down if there is some sort of slowdown in demand, if the economy is relatively weak. They're not just going to give on price automatically. They're going to try to keep those prices relatively high and those margins kind of where they were before. But I want to go to some of the detailed numbers and show exactly where we see strength. This is the third quarter in this column right here, and this is year to date. So the first 3 quarters of the year in the right-hand column. And you can see this is Buick overall. Sales are up almost 8% for Buick in the quarter and up 9.9% for the full year. So Buick, real source of strength. I think you see some really compelling designs from Buick and at a really great price point. So not surprising to see a lot of growth there. Look at this within Cadillac. I think this was really surprising. The Lyriq sales more than doubled from a year ago. And you see that trend is picking up. I mean, 7,224 vehicles sold for the third quarter. The pace of sales obviously picking up quarter after quarter. Where do you see a little bit of weakness? The Escalade, but the Lyriq is overcoming that. And overall, Cadillac sales are up 4.4% on a unit basis. Chevy struggling a little bit more. So where are those struggles happening? Well, the Bolt no longer in production, the Camaro, and then you see some weakness in the Silverado. So the truck market getting a little bit weaker. But overcoming some of that is going to be the Blazer EV. You see growth with the Silverado EV. So some a little bit better numbers there, but expect to see maybe margins will be hurt a little bit in the third quarter because you're seeing fewer Suburban sales and Tahoe sales and Trailblazers. These are the vehicles that are going to be of much, much higher margin typically for General Motors. So you're going to be replacing some of these with growth in the electric vehicle market, which is going to be a much lower margin. So maybe not the same cash flow that we had earlier in the year, despite some of the numbers that I talked about earlier. On the GMC side, pretty similar trends to what we see with the Chevy brand, the Sierra down a little bit, although the Sierra is holding up a little bit better. And then you see there is a limited number of sales for Sierra EV, but they're obviously pushing the Chevy brand Silverado EV a little bit more than the Sierra. Inventory, again, not a huge problem yet, but something you want to keep an eye on because those days that are off in later in the fourth quarter are going to be important. So we need to see those sales pick up a little bit in Q4, which is what management was saying earlier, and production to be down a little bit to get this inventory level more in that 50 to 60 range versus 76 days where it is today. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So what should we expect to see from General Motors when they report earnings later this month? Well, this is a chart that shows free cash flow as the column, and then the light blue line is the company's operating margin. So you can see lots of free cash flow coming into the business. Over the past couple of years, it's been right around $10 billion. Over the past trailing 12 months, $7.7 billion. Remember, that includes an impact of the strike that happened later in 2023. So we'll be lapping that later this year. But it's very possible that we see those margins come down slightly as customers move to a little bit lower cost vehicles. Remember, again, away from those really large SUVs and trucks, and also towards electric vehicles, which are just generally going to be a lower margin. But I think we will see a pretty positive margin and positive free cash flow for General Motors. Remember, this is a company that, as I'm recording, the market cap is just $51 billion. So let's compare this to kind of its biggest rival, and that's Tesla. Here's those same numbers for Tesla. This is a trailing 12-month basis. You can see that Tesla only $1.7 billion in free cash flow over the past year. That's pretty consistent with what it was a quarter ago. So that free cash flow is coming down in large part because operating margins are coming down. You can see that operating margins now about the same as they are at General Motors. And remember, GM is making significantly more vehicles, selling about 6 million worldwide, and they have the financing arm as well. So the numbers aren't quite apples to apples between GM and Tesla, but you can see where the trends are. There's a lot more leeway for investors if things get a little bit weaker for General Motors because that free cash flow is higher, market cap is lower, and the balance sheet is still in a really good position. Very little debt on the balance sheet on the auto side. Tesla, we'll have to see what those margin numbers look like. Sales were a little bit weaker than analysts expected in the most recent quarter, although you can see here that they were actually up year over year. Now, Tesla, these are worldwide numbers, so this is not just the US, so we'll see how things work out from a margin perspective. But looking at this comparison, I think it's pretty clear that General Motors seems to be holding up relatively well, taking market share in electric vehicles, and should be generating pretty positive free cash flow. We'll see if that meets analysts' expectations and if management continues to be as bullish as they have been in the past, adding to their buyback programs, continuing to be on that pace of buying back 15 to 20% of shares outstanding on an annualized basis. This is why GM is my top auto stock today, because you have so much leeway for the company to adjust through the natural ebbs and flows of the auto market, and management can take advantage of that cash that they have and the cash that they're generating to buy back shares. So it gives a lot of upside, whereas a company like Tesla, much, much more highly valued. Just multiple compression alone could send the stock significantly lower. But let me know what you think about GM and what the third quarter potentially looks like. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.